For Creamer Media's Polity, I'm Shannon de Rehove. Africa at Work CEO Dianna Games joins me in studio to talk about her book, Business in Africa, Corporate Insights. Welcome, Dianna.
Good morning.
Now, your book, Business in Africa, Corporate Insights, takes the reader to the coalface of doing business on the African continent. Why did you feel it was necessary to write a book, and what response are you hoping it will generate?
Well, there's two reasons that I did the book. One was that I actually wanted to publish a selection of my columns. I've been writing a column on African issues for 9 years for Business Day, and Penguin said that the columns, that they don't always sell that well, but they wanted something on business in Africa because they saw the opportunity, and they asked me to sort of come up with a model. And I opted to talk to people who are doing business, corporate leaders who are doing business in Africa, because there's so many reports around at the moment. Everybody's producing a report on business in Africa. It's a lot of internet research stuff and analysis and that kind of thing. And there's very little, or there's not enough about what is actually happening, what kind of experiences people are having within those statistics, or in fact, in some cases, masked by those statistics. So for many years as a journalist and as a writer and consultant, I talk to business people all the time, and I know how interesting some of those stories are. And some of the soft stuff that can actually upset your business plan is contained in people's experiences, not necessarily in reports. So that is why I came to the sort of model that I did. And I interviewed 17 business leaders. And then we have a couple of essays at the front, just really setting the scene about the African economies and so on.
Now, the book offers unique insights into the challenges of operating on the African continent. What are some of these challenges, and what solutions are there?
There's so many challenges, very hard to figure out, and there's some cross-cutting ones, like, for example, a lack of infrastructure, difficult supply chains, logistics, problems at border posts, problems moving goods around, and then right down to sort of the political environment, uncertainty, not so much about change of government, which is what people, that is a bit of an issue, obviously, but just really about policies that are suddenly introduced by a government to solve a problem, that create a problem for a business that didn't anticipate that. Regulatory uncertainty, which is a big issue because companies can't plan ahead if they've got no certainty on issues like that. So I think people there's a bit of a learning curve. I think governments are getting better at being more predictable. A lot of big companies are in regular contact with government, so the dialogue is better than it used to be, and so people are able to discuss this a bit more, and governments are not quite so high-handed always in just introducing a measure that will affect the private sector without discussing it with the private sector. And there's many others. I think people have to. Many companies have got businesses across different African countries, so it requires a kind of difficult balance of standardizing your operations and having certain requirements in place in terms of corporate governance, but also at the same time being able to be very flexible and adaptable to local conditions and being very aware of them. It's one thing to have a business plan, but you have to adapt to each country. I think that is something that people have learnt. It's been quite a steep learning curve.
One thing is always expect the unexpected in Africa. Now, on that note, what specific trends do you see and future opportunities for business in Africa in the coming years?
One of the trends I see is that people are far more cognizant of the need for local partnerships, for local knowledge and so on. There was at one point companies would go in and they would try and do everything themselves. Some still do quite successfully. But there's certainly there's indigenization in whatever you call it. Different countries have different names for it. That is a reality that's not going away anytime soon, and it will play out in different ways. So companies are being far more cognizant of local needs. I think new media has played a big role in alerting Africans to what's out there, what they should be expecting, to improving and being more of a sort of spotlight on what companies are doing. So people have to be much more aware of the kind of information that's getting out, and the way that people are assessing the market, and also about their brands. Before you had time to manage a crisis. Now it can be on the internet in 5 minutes and you've got to deal with that. So I think people are far more cognizant of what they might face and how to manage it. A lot of companies now have in-house risk management rather than having it as an ad hoc thing, which they might have done 10 years ago. Because even though a lot of the political risk has gone down, a lot of the business risk has become a lot more insidious because it's not as obvious as it used to be. And also with a lot of international conventions now being applied to multinational corporations, they've also got to adhere to all of those requirements. And it's particularly a headache for example, the resources companies who are doing business in difficult countries in quite remote areas. And one of the trends there also is a different way of managing and partnering the government and communities in not necessarily giving communities or employing people from the community, but actually making them less dependent on, for example, a mine in quite a remote area, and rather helping them, rather being a catalyst to more to economic development of their own, which so if the mine closed, they would have another stream of activity.
Mm. Now, you've mentioned 20 tips to help businesses working in Africa. What would you say are the most important of those?
Well, I think the issue of partnerships is always, as I said, that's really the trend of the future, the way people are sort of partnering and being far more cognizant of local culture and requirements and so on. Surprisingly, a lot of companies will go into a country without doing proper homework still to this day. And when things don't succeed, they talk about African markets being so difficult. Often it's simply the company itself has neglected to do its homework properly. So I would say that that is as deep a due diligence as you can do, not just on the company itself or even on potential partners, but directors and the linkages into the political networks, because in a lot of countries there's a very grey line between politics and business, and especially companies that are now having to look at all these international conventions. It really needs to be clear who you're dealing with and what the political connections are there, because something could easily ruin your reputation. Another one would be don't underestimate the market. A lot of these countries look quite, there's neglected infrastructure. They look quite sort of messy, if I can use that word. And companies that tend to think, well, people want they bring in their cheapest goods. But a lot of companies have said they find that people don't always want the cheapest. They would rather save up and buy it because they can only buy it once, for example. They would rather buy better quality goods. So it's a way of assessing the markets that says what you see is not always what you get on both ends of the scale. Sometimes a large population is not or does not always mean you're going to sell a lot of something. I think that mobile phones have been a double-edged sword in some ways, because on the one hand they've highlighted the opportunity, they've highlighted the willingness of African consumers to spend on something they really want. But on the other hand, with all this investment into consumer goods, they're also eroding the amount of disposable income people have. But nevertheless, I think that is a good signal of the potential opportunity, and consumer growth, I would say now, besides resources, is one of the fast-growing areas. I think that's common cause, and you see a lot of investment going into a lot of, for example, British companies that have been here a long time are reinvesting a lot of money into their operations. And we talk a lot about the BRICS, but there's a lot of other investors, and including South Africa, who are investing a lot and are needing to at this stage, because the competition is growing so quickly from all these other emerging markets.
Now, finally, how important is politics or the political situation of a country to the success or failure of a business in Africa?
Given what I said about the grey line being sort of quite grey between politics and business, it's very important to know, if you can, what political connections people have that you're doing business with. People often look at doing business actually with government. Sometimes that's the simpler route, because you know what's happening and it's clearer. It's a much clearer sort of picture. But I think also the other thing that people, and there was a classic case in Zambia where First Rand went into a big deal, which was then turned around by the government when the new government came in. And a lot of analysts said, but normally the incumbent wins an election in Africa. But in fact, Zambia is one of the countries where there was every chance that the incumbent wouldn't win, and that the head of the opposition might win, and that's exactly what happened. He'd lost the previous election by just a few percentage points. So I think that's what I mean about you think people know due diligence and so on. That a very cursory glance at previous elections would have told you that. So I'm not picking on them, but I just think that I think that is to do a big deal before an election, and it's happened not just at national level, but even at provincial level. For example, in Nigeria, where the states, it's a federal arrangement, the states are very strong and they've got a lot of power. And similarly, you can get that kind of problem where a state governor will overturn a deal, and that has happened a lot too, because he wants to erase all traces of his predecessor, or because he feels that the deal was done sometimes in haste just before an election, so he can get a cut of his his commission, and so on. So it's still a very big factor. Governments are still very strong and very powerful in African economies, and I think it's always a risk.
Well, thank you very much for your time. That was Africa at Work CEO Dianna Games discussing her book Business in Africa.